Hello and welcome to the channel. My name is Patrick and today we're going to look at two things. Mainly we're going to look at how is Bitcoin doing? Are we following the mathematical formula that we have presented here some months ago that is supposed to predict how Bitcoin behave in this correction? And when we do that, I will also go into something that is called time-based pattern. During the bull run, I was warning about that many people were looking at different months and how Bitcoin are behaving month to month and assumed that that will be the same in this last year, 2025. Turned out to be a big mistake. The correlation totally broke down. Now I can see the same thing have happened all over again, but for the bear or the correction or whatever we want to call it. And I'm afraid I think again that this is a big mistake and I will point out my point of view of it. Before we start though, there are no financial advice or investment advice on this video. This is just me sharing information for educational purposes. Let's jump straight into it. Some months ago I started to work with this model that is a model based on the inverse of Euler's number or Euler's exponential, which sometimes is referred to as ln, which is the log natural. And other bear markets and also shorter time corrections have been following this line. We started to look at this about 50 days from the top. And as you can see now, another 100 days later, we are still following it. We're circling around it just as we were circling around Euler's exponential in the up run. As you can see here, we have also been circling around it in the other corrections we've had or the bear markets we've had. Because what I'm out after here is to figure out what is the trend. Whenever I look at an asset, I try to figure out what is the trend. Is it a linear trend? What is the slope of that line in that case? Is it an exponential trend? Is it an polynomial trend? What kind of trend is it? And then when we circle around this trend line, that is more or less noise. Sometimes you can find reason for why we are circling it around, but that is not what you primarily should do, because there will be many things correlating with whatever asset you look at. I can easily find 10,000 charts out there, and I'm sure 1,000 of them correlate with Bitcoin if I take a snapshot in time and do not go too much back or forward. And you have seen this, they come and go. We have all kind of things. We have the stock market or some specific part of the stock market. We have liquidity, we have all kind of things, and it looks like they're correlating. Then we use them and then they don't work. So then we just jump to the next thing and the next thing and the next thing. The reason why that is a difficult approach is because people try to correlate these waves around the trend. Number one is to figure out the trend. That is a great help. Then, if you're lucky, you might also manage to figure out why and how we are circling around that trend line. And what you see here on the x-axis is the number of days since the top that we had in October last year. Here I've also plotted in green is 2018. And then in this orange is, and as you can see, if we forget this line for a moment, I just look at the data. As you can see, right now we are a little bit in a down here, while in 2022 we were up, in 2018 we were also up at the same period of time. So it looks like we are in the same place kind of ish. However, if I instead look at the trend line here, you can see that the trend line and the prediction line ends up much higher than the other bear markets. Now I'm starting this from the top. If I would start it from year to date and start in the beginning of the year, or from the last maybe halving, or how many days it is to next halving, there are different ways to measure this. And it could then be so that I offset these things so that I get the perfect correlation instead. So they all are up at the same time and they all are down at the same time. For example, in 2017, we had the top 3 weeks before the new year. Then in 2021, it was 5 weeks, and this time around must have been 11, 12 weeks. So that means that if I start the 1st of January in this year, I will offset them various much because they had different time, 11 weeks, 5 weeks, 3 weeks, until 1st of January. And if I do that, I happen to get them to correlate. And that is what I'm a little bit skeptical about, because we had the same situation in the bull run. Here you see 2025 in green, and then you see 2025 sorry, 25 in green, and then you see 2017 in this blue. And you can see here, for example, we had a rally up at the same time, and these both start from the bottom, by the way. So they're not from the halving or anything, from the bottom. And then you can see how they both rallied up. And then we had this correction that was 7 months here in 2024. And then we had something similar in 2016, I guess, then before 2017 happened. And a lot of people paid attention to this, including we on this channel as well. But then you start to see how this one went in one direction and we kind of started to go in waves. This didn't really match the old pattern. Then we had an up run and then again the pattern were matching. Then we had some opposites here. People just neglected that. And then you can see we're still here, not in 2025. Because entire 2025, despite that these two broke apart here, this one just took off, straight off. So then we said, we have no use for this anymore. We'll stick to the trend line because the trend line said we will continue like this in this direction. But despite this breakage in correlation, which some people followed this, and then instead of concluding that this was maybe a little bit random or it worked for a while and stopped working, people kept looking at month instead and saw that, yeah, but we had a pullback and then it went up, and they have all this data on like October will be a good month and November is crazy and this month is red, this one is green 80% of the time. But with 12 months, and they can either be green or red, the chances are quite high that a bunch of them will very often have been green and some of them will very often have been red, without that meaning that will repeat. And that is what didn't happen also. When it mattered the most, the 3 critical months in the later part of 2025, that correlation totally broke down and didn't turn out at all as in the previous years and as the data supposedly suggested. But we figured that out here in 2024, 1 year ahead of time, so we didn't fall for that trap. Instead, we just concluded that we had a correlation where the market moved a little bit in tandem, but then that one broke, so previous bull runs went down and then up when we went down, so we got out of sync suddenly. But we kept following Euler's exponential, and the predicted top from the actual top are not very far apart. So what I want to say with this basically is that I think it can be a costly mistake to think that everything will repeat month to month. First of all, depending where you start to measure, I start from the top. I think that's more correct, but there's different ways to slice a cat, I know that. But just because you have offsetted these, so you have happen to have the tops synchronized right now, I do not think that will hold for the rest of the year. And I do think that this trend is very different from the previous one, which is much easier to see if you focus on the trend and not focus on the noise going up and down and try to correlate that in some way. If we calculate the natural log here of Euler's inverse for also the previous one, you can more easily see what I mean. So here you see 2018 in green again, and 2022 and 2026. And you can see that so far at least the projection for where we will end up if we continue going down for 400 days, which we did in the other bear markets, the projection and the trend is quite different compared to the others. They're not similar at all. This could change, it could break, but so far it has held. And we start to look at it at day 50, and now we have another 100 days of data confirming that we are in fact following this trend line and not one of the others, or some totally different trend, because we could go zigzag or linear or whatever. There doesn't have to always be the inverse of Euler or Euler's exponential. But so far it has been, and so far it looks like it still is. And if the data start to drift towards perhaps a lower or maybe even a higher bottom, the bottom zone is maybe is already in, then we will see that, or likely we will see it at least ahead of time, because in that case this line will start to move down more and more the more data we get in, or it will suddenly start to move up when we get in more data if there is any change in the pattern of the data. So we don't have to sit there and wait and try to interpret the noise and then suddenly, oh, this month didn't go as we thought, we did the wrong thing. Now, with that said, it could be that we keep following the monthly pattern also. I'm not Nostradamus or anything, but I think it's unlikely we'll do it for the entire year. And even if we do, I think we're following that up here somewhere and not down here. So it will still be quite different in how this correction is behaving. And as you see, I'm calling it a correction and not a bear this time around. So that was what I wanted to share today. I will soon be back with a little bit more videos. And if you find this interesting, please share, like, comment, all those things. You can comment and like or dislike if you do not like it also, of course. YouTube seems to not matter. As long as you have any reaction, it's good for the channel. We hope to see you all soon again.